Welcome to AM Best Audio.
I'm Lori Chortis for AM Best TV, and we're at Riskworld 2024. Insurance CEOs today are balancing a myriad of priorities in an ever-evolving business environment, driving innovation in the industry, and navigating new and emerging risks. Joining us now are two insurance leaders to discuss that and other trends in the market. And they are Martin Neuhaus, the president of Munich Re, Facultative and Corporate North America, and Katie McGrath, Swiss Re Corporate Solutions North America CEO. Welcome, everyone. Thanks so much for joining us.
Thanks for having us today.
Thanks for having us.
Katie, I'll kick off the discussion today with you. How is the risk environment changing today, and what should insurers be doing to adapt and navigate those challenges?
Well, I think what is changing is the speed and the interconnectivity of all of the trends and risks headed our clients' ways. So nothing is new from the standpoint of geopolitical or economic, legal, regulatory, climate. But I do think the speed within which they are attacking the industry and our clients is much faster paced.
Absolutely. Martin, can insurers effectively manage non-modeled natural perils, especially companies doing business across diverse geographies?
No, thank you for that question. When we talk about non-modeled perils, what we really mean is net cat perils for which no established probabilistic model exists. So these are not really non-modeled, because even when I just do a simple loss calculation on experience, I build a model, even a simple one. So, but these perils are definitely on the rise, in particular severe convective storms. Between 2008 and 2023, on average, these losses have increased by 6%, way above the inflation rate of about 2% during that period. And it's an issue for insurance companies. And in 2023, we once again had a record loss year with about 55 billion insured losses just in the US from severe convective storms. We did a study at Munich Re with our portfolio a couple of years ago, and we recognized that we were also underpricing these perils. So we adjusted our pricing, but also, maybe even more importantly, structures, coverage, scope of coverage, and also we need to monitor our accumulations in certain peak areas. And I'm sure that other insurance companies have gone through a similar process.
Yeah, I actually couldn't agree more. And I do think just the awareness of the modeling and how critical it is. And I think it goes back to data and technology and how we use the tools for ourselves as insurers, as well as making those tools available as much as we can to our customers and our partners.
Absolutely.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Well, we've been hearing a lot here at Riskworld about the property market. Katie, what are you seeing today? What are the current market conditions in property when it comes to loss activity and rate environment?
So I would say it's more stable than what we saw last year, and I think that's great for our clients. I think the rates are moderating a bit. I think insurers are still intending to get risk-adjusted loss cover, and that's what we need, as our clients need, since they're also carrying heavy retentions. But I do think just the stability is something that the market needed, and that's what we expect to see for the remainder of this year.
Martin, shifting gears a bit, what is the impact of the tort tax on companies in the U.S.?
Yeah, I think I'm glad that you touch upon the casualty market, because I agree with Katie that on property, we seem to be a little bit in a calmer environment than in prior years, and the attention is turning to casualty to some degree. So the tort tax is really an additional cost that is caused to the legal system because of legal system abuse. And legal system abuse in the United States is really driven by four major trends. The one is litigation funding, that external investors see litigation as an asset class that they want to earn a return on and invest in lawsuits and fund plaintiffs and driving up costs that way. We see more advertising by plaintiff attorneys, the billboard effect, so that really giving the impression to policyholders that there's a windfall gain for them if they retain those attorneys. We see more of the settlements that are being paid out not to the plaintiffs, but to the attorneys and also to the investors. And then finally, the fact that there's no real caps on the settlements in the U.S. Liability system also leads to an increase in cost of the legal system. So overall, in the end of the day, this drives up the cost of insurance for corporations. We see it in particularly in commercial auto, but also in D&O and product liability. Makes insurance more expensive for the companies.
Well, looking ahead, and I'm going to ask you to take out your crystal balls for a moment. What do you foresee for the insurance industry in the next 12 to 24 months? Do you see any, in terms of big changes, trends, new opportunities, challenges? Katie, what do you see?
Yeah, I mean, I would go back to data, technology, and then I'd have to pull in talent. So I think those are really the enablers that we can use as an industry. I do think, again, the fast pace of everything we've been a slow industry in the past, and I think we need to step it up and accelerate from more of a reactive industry to a preventative industry. But I think the enablers are, how are we using the data? What are the tools and technology that can accelerate, as I mentioned? And then how are we getting talent? Because when you think about all of these emerging risks coming at us as an industry, we have to get a diverse talent pool to address it. So I think those would be, if I were to pull out my crystal ball, the opportunities we have.
Great. And Martin?
Yeah, I couldn't agree more with Katie on the diverse talent. Our industry has not been very good with diversity in the past, and we see this now changing with people from very different backgrounds and ethnicities and different educational backgrounds joining the industry, and that's a good thing and a necessary thing because, as Katie mentioned at the beginning, we see some risks that we haven't seen in a while in the industry. We have a real war in Europe going on. We have a war in the Middle East. We have tensions in Southeast China. We have inflation that we haven't seen since the early 80s. We have had a global pandemic that we haven't had in 100 years. So we have a lot of challenges out there, and the old ways of doing things might not work in the future anymore.
Absolutely. Absolutely. Well, Martin and Katie, it's been a pleasure. Thank you both so much for taking the time to speak with us.
Thank you.
Thank you.
For AM Best TV in San Diego, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.